Okay, we're here on Twitter Spaces. We're short the quantum computing stocks. We are losing a lot of money. But, I feel good about the short and have no fear that these stocks will crash at some point. Don't know when, but that's the stock market for you. So D-Wave doesn't really have any news today. They have they said that they have general availability of their new computer, but I don't even think that's really true. They have like a private cloud that you have to get like approval to use. I think we meant, do I have beef with Cupid? Not. Anyway, sorry, I'm on YouTube as well. I was promised a big audience here, so let's see if that actually happens. But yeah, D-Wave is this sort of pseudo quantum computing company. It's not even real quantum computing. They're not trying to make a quantum computer. They are doing something called a quantum. They've made something called a quantum annealer. And they've been trying to sell this annealer for the last 10 years, and they haven't been able to do that. If you look at the revenue of the company, it's never been more than 10 or 20 million. So, it's unfortunately kind of this just never do well company that's never caught the attention or attraction of any larger company. Every time they make a sale, it's just a consulting deal where they kind of like trick a Fortune 500 company into thinking that maybe their processes could be improved by quote unquote quantum. But those consulting like arrangements never end up panning out into anything real. And so just imagine if you were a company that pretended you had some miracle technology, okay? And you go to a Fortune 500 company like Boeing or a NTT, that's just like the AT&T of Japan, or whoever, right? And you say, I have this magic technology that you don't understand, that only we understand because we're the experts and we made it. And this magic technology is going to make your worst, like most difficult bottleneck process work better by 20%. Okay. What would the company say? Well, pretend you're working at that company now. You'd say, okay, cool technology company, why don't you come in for a meeting? And they come in for a meeting and they say, this super cool technology that we invented that you can't possibly understand because only we understand it. We invented it and we're going to help you do that bottleneck process and improve it by say 20 or 30% possibly. And the company VP whispers to the company senior VP and says, if we did that, we'd save 200 million a year. And the company's senior VP eyes widen. He says, wow, tell us more. Do you think you can really do it? Well, now you're back to the D-Wave. You say, well, we could look at it. We've done this before. I think we could have a shot at it, but you're going to have to sign a deal. We're going to have to do an exploratory consulting deal for, I don't know, $300,000, and we'll see how it goes. Now, most companies do a little bit of research there and say, you know what, we're not ready to embrace quantum yet. But a few companies will say, fuck it, let's see what happens. Let's put down a few $100,000 and maybe it'll design a custom tool that can actually help on our processes. And it never works, ever. But they get the revenue from those consulting arrangements, which are what they call customers, which are, they've done this maybe 60 or 70 times. And they've tried to help their clients, but they've never actually been able to create a production pipeline. When I rent a computer from AWS, I might rent a server to host a website. I might rent a server to host a Redis instance. I might rent a server to host a database. And I kind of know what I'm going to get, and I know what the price should be. But that's not what IonQ sells. What D-Wave sells is they basically say, we're going to rent you this computer and we're going to write the code for it because you don't know how to write the code for it, which makes sense because literally nobody knows how to use their computer. They invented a one-of-a-kind computer. So that one-of-a-kind computer requires their one-of-a-kind programmers to figure out how to make it work. And so they say they can translate your problem into this minimization problem called QUBO or icing. And these are, complex scientific models. And the annealer is supposed to find the minimization kind of coefficients faster than a classical computer. But if you read the literature, you can see that the classical computers, not even GPUs, like regular old CPUs, x86 CPUs, they will find the minimization coefficients just as fast or faster than the D-Wave computer. And you don't need to write any special code. You can write Python or something. You don't have to write the weird D-Wave code, which D-Wave won't even let you write. D-Wave will write it for you. So like they try to sell consulting services. They don't just sell compute time. So imagine if Amazon, every time you clicked an EC2 instance, they said, hold on, we're going to need to send a consultant with the EC2 instance to teach you how to use it. That's not cloud. That's, just basically a cash grab for any company stupid enough to want to, quote unquote, explore quantum. I think some of these bigger companies, you're talking about trillions of market cap in the S&P 500, tens of trillions, if not 100 trillion. Everyone wants to run their business more efficiently and more smoothly. So sometimes it's worth staying on top of, quote unquote, quantum to see if the technology matures. And, they'll tell you that, come back in a few years, maybe we'll be able to solve your problem then. And they just kind of keep this lie going for the last 10 years. And it's never shown up to be anything. The rest of the quantum computing companies, I almost have some sympathy for now, even though I'm short them as well. Rigetti is actually trying to build a quantum computer. When I say computer, I mean something very specific. I mean a generally programmable computer. A computer that has an instruction set. You can look at the instruction set, and the instruction set has the basic instructions, like if you know any assembly, like move or something like that. You can swap the values of two addresses in memory. You can compare the two addresses in memory. These are all like simple elements of any computer. But that's not what D-Wave has. D-Wave has a completely different kind of machine. But at least IonQ and Rigetti and all the private companies, and of course all the big companies like Microsoft and of course Google and IBM, are actually trying to build general purpose quantum computers. They won't succeed, in my opinion. I don't think there's a big market for these general purpose quantum computers, but at least they're trying to stay real to that mission. D-Wave is not sort of that. D-Wave is the most sort of generally seen to be fraudulent and like not, a really reliable company that has ever really told the truth about anything. But it's up, of course, its stock is up the most. So, I think the people who own these quantum stocks, are kind of like, it's ironically the worst stock that's the least real that's up the most. So it's kind of a funny place to be in quantum today, at least. But, what can I say? It's a really wild thing. If you read the report on D-Wave, which stock ticker is QBTS for anybody who doesn't know, by Carousdale Capital, it's really interesting. They interview former customers and former employees of D-Wave. And you can imagine what they had to say. The customers say they don't use the product, it doesn't work. And the former employees say that the quantum part of it doesn't do anything. The quantum part of it is just there for show, that they actually have a regular old computer in the back doing all the work. And they call it a quantum hybrid solution. Well, I could call, anything a quantum hybrid solution. You could put a quantum computer on your toilet and say it's a quantum hybrid toilet, when the regular hydraulics are doing all the work. So it's sort of this, silly appendage that they put on to try to, solve these problems. And the optimization industry is a real industry. There are real companies that go into bigger companies and solve optimization problems. Like traveling salesman is like the canonical, ideal problem. But how many trips, for example, a salesperson that has to make 800 trips in New York City, or a delivery truck, more realistically, what is the best route for them to take to minimize the amount of time they spend traveling. That's the kind of thing that, sort of makes sense to try to optimize. But what sort of has historically been thought of, especially if you read like, I don't know, CRPS or like one of the original algorithms books, is that this is a very hard NP hard problem. But the reality is, even though it's NP hard, it's actually very easy to get a very approximate solution. And this is what Jensen Huang has talked about as well, that you actually don't need to solve this problem. That if you can get a relatively optimal route in, a millisecond, it doesn't really make sense to spend millions of dollars to get the optimal route, because you might save a half a second or something like that, but the approximation of the optimal route is just as good. And so this is very interesting to theoretical scientists. This is not interesting to, a practical, use case. Anybody want to come on, especially want to talk to anybody that wants to debate, this from the long side of quantum computing, because I think everybody and their brother with half a brain knows that these are all scam companies. But I'd be very curious to talk to somebody that actually, is bullish on this industry and why. That'd be, I think, a lot of fun. Crickets, chirp, chirp. I'll wait. Just hit request and we can hash it out. I know it can be a little intimidating, but you're up. If you're long D-Wave, you're up 28%, so you should be fine. But yeah, I think we're also just maybe more to zoom out for a second. There is this liquidity. There's kind of this liquidity bubble in a way, right? Like we have D-Wave that's up a lot, but we also have Farcoin. Farcoin's at a $1 billion market cap, and Farcoin is a liquid $1 billion. I can't find a single person who wants to talk quantum, because I think that, generally it's not people who are bullish on quantum, they're bullish on the idea of a stock going up a lot. And they sort of have this like vague reference to like the next Nvidia, and quantum is the future. And I think if you're a new investor, just remember that before that, people said the same thing about weed stocks. Oh man, can you imagine how big weed is going to be when weed is legalized? Everyone's going to be smoking all day. The legal market is going to completely flip to legal, and like 5 companies are going to make so much money. All 5 of those companies' stock price is down 95%. It's not easy investing. When genomics came around, people said the same thing. They said, Martin, I was a 18-year-old pharma boy. I wasn't even the pharma bro yet. I was just a boy. But I was working at a hedge fund, and people said, Martin, this is going to change. Everything's going to change. Genomics is going to change everything. Genomics is going to fundamentally change the entire landscape of the way we look at medicine. And the problem with that is it just wasn't true. The genomics, sorry, I'm just looking at some requests here. The genomics market, companies that were quote unquote genomics companies didn't do anything for pharma. They were stocks that went up a lot and they went right back down. And the Human Genome Project was a real thing. Genetics is a real thing. It was very important to mankind. It was very important to medicine in the long run. But the companies that held themselves out to be genomics companies like Human Genome Sciences, they didn't even do any genetics. They just were trad drug developers. Human Genome Sciences back in the day, their biggest thing was albumin fusing recombinant proteins. And, so that stock went down 95% too. A few companies took advantage of advances in genetics, but not directly. They mostly just piggybacked off academics. So whenever a buzzword comes around and people think that they can get rich from some random stock that's like, oh, D-Wave, that's a quantum company. Well, it's not even a quantum company, one. And two, the bubble is not, this is a bubble. There is no quantum opportunity at all. So not only do you have the bubble wrong, but you have the stock wrong too. You have to get them both right. And even then, you might not get out alive because the market's generally frothy. So for example, AI is a bubble, but it's a real opportunity in the end. Palantir is a real company with a great product, but it's still so highly valued that I'm not sure it's a great investment. So, it's very hard to just sort of go on Google or Wall Street Bets or whatever and read an article and say, oh, I'm going to make a lot of money on this. And of course, people will pile into this trade, thinking that they, are onto something. And usually that's sort of hopefully the top for us short sellers. But, it's sort of befuddling and a little bit bemusing to watch, just kind of like total insanity play out in front of your eyes. And, the old saying is, the market can always be crazy and irrational, and it can do that for a very long time. But, I found that unless you are really pig-headed about your bet, generally you can find enough sort of solvency to ride it out. And I think D-Wave is one of these things that, it's hard. I can't imagine this company sort of staying afloat very long because their bookings for this quarter are $1.5 million so far. So this is a company that's worth, $4 billion. So it's pretty hard for it to trade at 200 times sales for very long without growing substantially. And I don't think they will grow very substantially. So anyway, I have two guys on here. Are you guys bulls? Any bulls here?
Yeah, so obviously quantum's like a solution, still looking for a problem to fix. But what do you think of neuromorphic computing?
Totally different subject.
Yeah, I know.
Okay. JT, Kirk, are you a bull on quantum?
Yeah, I've been holding it for 2 years now, I'd say. I think, but I'm considering selling. But everything you say, I think I would agree. But I think you also underestimate how many people are just now finding out about quantum and starting to trade it. So I think it will take a while for them to realize what's actually going on. So, yeah.
Yeah, I think the psychology game is, to some people, that's the only game in the stock market. And the nice thing about the stock market is you can play lots of different games and still be a winner. Some people play index arbitrage, where they buy literally 500 stocks of the S&P 500 and they trade them at fractions of a second against the reference index price in the future. And they make money this way. Some people make hundreds of millions of dollars this way. I don't make money that way. I don't think you do either, because it's a very specialized thing to do. Some people are options market makers. Some people are equities market makers. Some people are private equity investors that hold huge parts of publicly traded companies. Some people do that privately, then they take their companies public. There's about 50 or 100 or more ways to make money in the stock market. And I think that if you want to be a market timer that looks at, psychology, where you say, the vast majority of people don't know anything about quantum computing. That's probably true. The vast majority of people missed Nvidia. That's also true. The vast majority of people want to make and find the next Nvidia. Well, what's the next most advanced form of computing? Well, quantum computing.
Yeah,
that's
the exact way I found out about it, because I have a friend who is studying experimental physics, and 2 years ago, I think even more than that, before D-Wave was even publicly traded, he told me about the company, and I just wrote it down. And then when it was like $1, I found out it went public, and I bought a lot of it, and then just held it. I don't know even what quantum is, anything. So when it blew up, I just told a few friends about it, and then it kept on blowing up. And now I'm hearing about it from other people. So
right.
Just like a week ago was the first time I heard a random person tell me about them. So I'm like, what the fuck is going on? And now I see that it's blowing up. So I think it's really just the general public finding out about it, and the news. If you take a look at the news about D-Wave, everyone is saying everything positive. So
yeah, but don't you think that's a top signal that you're now hearing about it from other people? it's kind of like a chain letter or Ponzi scheme, right? You got in first.
Yeah, but I think people are desperate to get into something will they will like make a lot of money, because every time I hear about it, I hear people comparing it to Nvidia as something like that has like a product and everything.
Have you looked at the quarterly results at all?
Yeah, I've seen that they just sold that one computer, and that's basically what they made all the money from. So that's why I think they published today that their computer is available for sale, because I think they're hoping to sell it again, so that the next quarter they have again profits, so that they keep the price up. But yeah, who knows?
I don't think that's exactly what they meant. I think what they meant was that you can rent it on the cloud now. That's what it means by generally available.
No, I think I read that it's like available for sale, like that you can buy the computer itself.
No, I don't think they have. I don't think they have any. So like that one-off computer was built very specifically for Ulick, and it was like a 6-month to a year process to build it and sell it. I mean, if you listen to the last conference call, they made it pretty clear that they're not going to be selling another computer anytime soon. And then if you look at the bookings, they said that their bookings was 1.5 million, which is very low, obviously. So I don't think anybody is going to be buying the computer anytime soon. And I don't think they have one for sale. Like if you look at inventories, right? Inventories is traditionally where you would have, if you were building a computer for sale, right? It would cost you money to make the computer, right? And you would have that under your inventory section of your balance sheet. But their inventory section only has 1.7 million in it. So I don't think they've actually even built a computer to sell again.
Maybe I read it wrong. I don't know.
It's not about reading. I think they read a lot of things. They write a lot of things that are misleading. Like if you just read the financials, they'll tell you a better story, because if it's a $15 or $20 million computer, it should cost millions of dollars to make. And I think that if it costs millions of dollars to make, they have to have raw materials to construct the computer. If they have those raw materials to construct the computer, they would be on the balance sheet, but they're not on the balance sheet. So it doesn't make a lot of sense. And then the outside of the Ulick one-time sale they made, they haven't sold a computer in 4 years. The last time they sold a computer. So I don't know why they would start selling them left and right again. They didn't give guidance. They used to have guidance. They stopped giving guidance. So if they were going to say, hey, we're going to sell at least one more computer this year, they could have revenue of 30 or 40 million, but they haven't even said that. So I think they're just planning on selling the cloud computing. And again, 2 quarters ago, their revenue was only 2 million. And I think next quarter it'll be 2 million again. So
yeah, I'm just not sure when to sell. That's the only problem. I really think it might go up even more because of people are really writing for it. So I don't know.
Yeah, the psychology is interesting, but I think that at some point you probably do want to see if it's a real company or not, right? Because if the psychology alone can't get the stock up forever, there has to be reality at some point. Because right now the company is worth $4 billion, right? So could it go to 5 billion or 6 billion? Sure. But
you want to hold quantum stocks long term, you're going to be holding till like 2035.
I'm sorry?
So if you're going to want to hold quantum stocks long term and think they're actually going to be profitable down the road, that's going to be like 2033 beyond.
Yeah, we don't know, right? I mean, D-Wave is not...
that's still a big if.
Yeah, D-Wave is not even saying that they're building a quantum computer that's going to take a long time. That's the story for Rigetti and IonQ and IBM is, don't worry, guys, it's around the corner. Breakthrough's coming soon. It's not coming tomorrow, but it's coming. That's the story for every other quantum computer. But for D-Wave, that's not the story. D-Wave's saying, we have it now. And obviously this is a huge lie because their quantum computer is not available on AWS. It's not available on an open cloud like Azure. You can't just rent it. If you try, they call you up and they say, what do you want to use it for? Let's get you into a consulting agreement so we can show you how to use it. And of course, you're going to spend hundreds of thousands of dollars consulting, and they're going to spin you. And when it doesn't work, they're going to say, oh, don't worry, we can work on it even more, and we'll bill you even more. And it's this constant, nonstop billing until you give up.
That sounds like IBM.
Yeah, something like that on a much smaller scale. IBM's a big, successful company with a lot of revenue. And speaking of IBM, by the way, Kirk, your microphone, we're hearing a lot of noise coming.
Shit.
It's all right. So, yeah, IBM actually has a quantum cloud where you can just go to quantum.ibm.com and you could rent a quantum computer right now from IBM. And they give you 10 minutes for free. And a minute is like $100, so it's not cheap. But I've written code and ran it on IBM, IonQ, and Rigetti quantum computers. But you can't do it for D-Wave. And everybody who tries a D-Wave says that a regular computer is better. So to me, this is like one of the biggest scams I've ever seen. But, psychology is a very powerful force. As you can see, psychology is stronger than rationality. The rational brain would just look at the income statement or the balance sheet and say, oh, okay, this is all a scam. They haven't sold a computer. They get one computer sold in 4 years. How could this be a real company? And, they've made it clear they're not going to sell another computer anytime soon. The last conference call, they said that, it's unlikely. Why is this company worth $4 billion? That I don't know. But I think the FOMO of the next Nvidia is something where even Nvidia was, kind of this rinky-dink company that wasn't expected to become the world's biggest company. They kind of fell into it by accident. In 2012, AlexNet came out, and AlexNet showed deep learning works. And ever since AlexNet, there's been this, kind of furious race to make deep learning better and better. And it turns out that the best computer for that is the GPU, and the rest is history. But the problem with analogizing that to quantum is that it presupposes that the 1 in a million happens again. So you have an instrument that's useful for thing X, and by serendipity, it becomes useful for thing Y. This happens a lot in pharma. Viagra was one of these cases. But when I say it happens a lot, it kind of happens 1 out of every 50 or 100 times. Viagra was designed to be a heart drug. It turns out it was really good for erectile dysfunction. Wonderful. But that's not how most drugs work. Claritin is really great for blocking antihistamine response, or being an antihistamine, I should say, and blocking histamine response, but it doesn't do anything else. Neither do most other drugs. They do one thing. They do one thing well, and that's it. Quantum is, to assume that we're just going to figure out what it does in 10 years or 20 years doesn't really stand to reason. It either will do something really useful or it won't, and we don't really know yet. But that doesn't mean that the likelihood is it will. The likelihood is that it won't. In fact, if you talk to people in the field, they'll tell you there's no actual use for these machines other than the single use of cryptography, which is what got folks excited about it. Cryptography is an interesting field. It's not a huge commercial field. And NSA has already started to point to lots of post-quantum cryptography techniques that are free and easy to implement. And even D-Wave doesn't solve, doesn't use Shor's algorithm or anything like that to do quantum speedup. So again, most of the scientific community thinks D-Wave is a scam. You can look at Scott Aronson or John Preskill, two of the leading quantum physicists in the world, that have both talked shit about D-Wave, but both have some hope about the rest of quantum computing. Preskill is the father of quantum computing. Aronson, I would argue, would maybe the son. But either way, these guys are, experts in quantum computing, and they both think maybe we will get a quantum computer. I think Aronson is a little more skeptical than Preskill, but when it comes to the subject of quantum annealing and D-Wave, the scientific community is unanimous that these are worthless products. So in any event, that's kind of my 2 cents there. I mean, I do think, to your point, Kirk, that, there is a FOMO, there is a psychology there, but, that applies to every stock. And it very well could be a situation where that FOMO ends, right? When people hear what I have to say, or they read a little bit more and say, like, oh, actually, this isn't a real thing. Oh, turns out that the real quantum company is IBM or Google, and this is all just a bamboozle. It doesn't take long for FOMO to go away as quickly as it came in. If you look at Tilray, that was a weed stock that went from 0 to 200 back to 0. The FOMO went up. Oh my God, weed is going to be the next tobacco. These companies will be bigger than Philip Morris, Altria. I can't believe it. We're going to sell all this weed. And then it turns out that none of that was true. The quarter was bad. They didn't have any profits. All it took was a couple of quarters of financials to say, oh yeah, so much for the weed revolution. If there was a big weed revolution, revenue would be going up and earnings would be going up, but they're going down. And that's exactly what's happening with D-Wave. One of the other quantum computing companies, you'll get a kick out of this, is called QUBT. It's called Quantum Computing Inc. QUBT is the ticker. And that stock, this company had $35,000 of revenue. No joke.
Yeah, I heard about that one.
Yeah, $35,000. That was their revenue. I mean, that is a absurd, kind of situation. And the D-Wave situation is not much better. They got this computer sold to Jülich. Jülich is kind of this weird German institute that has $1 billion a year budget, and they're supercomputer institute. So for them, they want to own kind of like one of every machine, but they're not doing it because they think it's a good investment. And they just rented it for free. Not even rented it, they lent it to another scientific group that did a research paper that showed it was not faster than a normal computer. So much for 15 million. So that paper is on archive.org, which is kind of the new scientific hub. So I don't know. To me, this is all a scam. There's a lot of momentum and excitement, but this is like sheep being led to the slaughter. Anyone else like this stock? They think it's going to go up? Just hit the request button. I appreciate the psychology part of it. I think that's very important to some traders and some investors. Like I said, there's a lot of ways to game the market. That's one of them. There are people who make money in the market. They don't even know what the companies do. They just hear the beat of the market. They have their ear to the ground. That's wonderful. That's not what I do. I'm a fundamental analyst. I look really deeply into the technology of the companies. I look at the valuation very closely. That's how I trade the market and make money in the market. I don't begrudge somebody for taking a different approach. That's totally fine. And two traders can be extremely profitable and have totally different viewpoints. My friend had dinner with Warren Buffett, and he hears me talking about all kinds of investors I either envy or I invested with or I hate or whatever. And I talk too much about this stuff. So he asked Buffett, what do you think about Renaissance? What do you think about Soros? What do you think about him and her and this and that? And Buffett said, look, and he kept asking him, and, Buffett's a super nice guy. But he said, look, my friend Pedro, he said, look, Pedro, I don't really care about what other investors do. I'm sure some of these guys are probably even better than me. But at the end of the day, I do what I do. I'm comfortable doing it. It's obviously worked for me. I'm going to keep doing it this way, and I'm not really going to change it. And that has worked for Buffett. And I'm not comparing anybody here to Buffett or anything like that. But the point is, having a style that says, I'm going to do this, and I don't like tech stocks. The guy's never owned a tech stock other than Apple. And I'm still going to make a lot of money. Well, a tech investor is going to look at that portfolio and say, what the hell is this? this is stupid. But of course, it's worked fine. So it's certainly not, something that's, you can't exclude other people making money. It's just a style that you like, and it could conflict with the style that somebody else has. And, that's something that every investor has to appreciate, I think. What's up, Sravind? Maybe Michael. Hello. I don't think I can hear you if you're talking.
Oh, can you hear me?
Now I can hear you.
Perfect. Okay, so I wouldn't consider myself a baggie. I definitely.
Well, a bull or a bear? We'll start with that.
Pardon?
We'll start with bull or bear.
Well, honestly, overall, I would say I'm a bear. But I do like when there's momentum in a market. And, when I see, like, for example, when I saw this morning that they announced, I knew that obviously it wasn't going to pump hard, but I still put a little bit in and kind of rode that wave. But I feel like a lot of people are doing that, which is, constantly pumping up. But would you say that because you are involved, that people are purposely buying this to kind of go against you?
I doubt it. I mean, squeezing a short. I mean, most of Wall Street is short this stock. In the hedge fund world, this is like one of the better shorts. So I think there's sort of two dynamics where you have short sellers giving up, which of course, is either forceful or not forceful. And then you also have long guys who have FOMO also tend to, like, you build a house of cards, because if you like, of course, everyone likes momentum, but the problem is momentum stops, and then the momentum trader goes to the next stock. You might go to HIMS or Palantir or whatever other stock is up today and just go buy that stock. And so, elephants squeezing into a hallway create a commotion, but when they squeeze out of the door, they also create a commotion. So I think when a stock is full of momentum traders, it can cut both ways, right? It can go wild to the upside, but it could also go wild to the downside. And we've all seen that. And especially if you don't have people like Palantir is a momentum stock, but it has true believers. There are people who will own Palantir and they're never going to sell it because it's a great company. They're growing revenue, they're growing earnings, they have amazing technology. But D-Wave doesn't have that. I mean, if there are people that are doing that for D-Wave, they're going to be sorely disappointed because they don't have revenue, they don't have growth, they don't have technology. And the momentum guys buying it will be just as fast on the way out as they are on the way up. And there's no gravity in the stock market, but in a situation where there's no fundamentals, kind of gravity does come into play, because you can only reach so much heights without having something real. And of course, the meme coin phenomenon also kind of shows you that. Like, there is a top to how big you can get a meme coin. Like, everyone's tried to crap out a meme coin in the last year or two. Even the president did it. But no matter how famous you are, you just can't sustain much growth in the meme coin, because it's a greater fool theory of passing a hot potato. And eventually the music stops. People look around the musical chairs for a seat. They try to sit down. And by the time the stock's 16, then 15, then 14, then 13, your momentum trade, you might be down on it. And you want to get out the first sight of weakness. So I think the momentum works great, but it's better if there's substance to the company, like a Palantir or HIMS that have like good products, good revenue growth, things are looking up. The things that D-Wave has going for it are, it's got the word quantum in it. That's a good thing. The company puts out a lot of promotional materials. That's a good thing, I guess. But
let me ask you this.
Yeah.
Are you personally going to double down on this position? Are you that strong of a believer?
Yeah.
Or you see you've already doubled down? Like, where are you at in terms of position sizing? Because I feel like people saying one thing and then what they do with their portfolio can sometimes be two different things.
Well, I have a portfolio that I stream, and that portfolio is down, very substantially, 30-something%, because of this trade. And, that portfolio is going to do what it's going to do. It was sort of a portfolio just to show kind of what I like or don't like. But, I'm going to stick it through. I think it's a zero. This is a worthless company. Its value is literally zero. Their product is faulty, and it doesn't provide a value to any of its customers. None of their customers have stood up and said, this helps us, that this is a product we use daily. If you check into it, you'll quickly see that's nobody actually uses the product or likes it. And there's dozens of papers that show that it doesn't work. So to me, I'm willing to wait it out. Can the psychology cause more pain? Well, it's caused a lot of pain so far. And as you know, in the markets, there's no rule that the stock can't go to 100. There's no rule that says it can't go to 1,000 or 100,000 a share for that matter. It can trade wherever the buyers and sellers meet. And it only has to trade there for a second. Like GameStop went to it 400 for a second, right? It's never going to see 400 again. At least not anytime soon. But it went there for a second. It still caused a lot of chaos. So, I'm cognizant of the fact that can happen, that these things do happen in markets. But
what about the potential of like an acquisition or something where just because they have so much hype that they get cut into, let's say, a ridiculous funding round or something? For example, like the Saudis and their huge investment into AI. Like, what if they get cut into something like that?
Yeah, I don't think that's the way the real world works. Like most of the larger companies they don't really do acquisitions anymore for whatever reason. They just build it in house. You rarely see these deals. And then two, they do a lot of research before they buy a company. They don't just spray it around. It's very rare that, a company will do that. It has happened in the past where companies kind of got FOMO. But if you talk to the people at these companies, they're not as excited about quantum as you might think. IBM, for example, they have all the technology they need. They don't need anything from these companies, which are far behind them. D-Wave just doesn't have any technology to speak of, period. It's old technology that nobody wants. So I think the good thing about quantum that's publicly traded is 2 out of the 4 companies are frauds. QUBT is a company that was a beverage company that last quarter had 35,000 in revenue. Nobody's going to buy them. Why would they? D-Wave is a product that's faulty. Now, IonQ and Rigetti are different, right? These companies are actually legitimately trying to make a quantum computer. Maybe they'll do it, maybe they won't. But
are you short those companies as well?
Oh yeah.
On IonQ and Rigetti?
Yeah. I think that Rigetti is really far behind everyone else, and then the space is just a bad space. So there's a twofold short here. I was short this company Humacyte because I didn't think they would get FDA approval of their product, but I also thought that if they did get FDA approval of their product, nobody would use it. And so it turns out that the FDA did approve it. They were able to exert, I guess, enough political pressure on the FDA to get an approval. The FDA guy reviewing it said he did not want it approved. And he even quit in protest when it got approval from a higher up. He said it was medically, insane to approve the product. They approved it anyway. And last quarter, they sold $100,000 of the product, which is not going to sustain a $500 million publicly traded company. So the stock's been in the crapper since. The same thing will happen to IonQ and Rigetti. If anybody happens to make a quantum computer, it's probably not going to be these 2 pissant companies. It's probably going to be IBM or Google or Honeywell or, maybe Microsoft is a dark horse. Microsoft is the outside horse here. So that tells you how hard and unlikely it is that these guys do it. But if one of those companies happens to do it, the problem is going to be the same problem as Humacyte, which is how the hell do you sell this thing? Who wants a quantum computer for what? And there are other types of complex instruments. NMR, nuclear magnetic resonance, is a really complex, it makes a quantum computation. And it's used very rarely, but it's used occasionally in material science and pharmaceuticals. That's how I know about it. The main company that makes NMR machines, which are multi-million-dollar machines, just like quantum, is called Bruker, BRKR. It's publicly traded. It's only worth $4 billion, and they sell $1 billion of these machines a year. So it's like a real business, but it's a very finite solution. You can't do lots of things with it. Like Nvidia, you can write a CUDA program for anything. But you can't really do that with any quantum computer or NMR for that matter.
Wait, so when you purchase, obviously, like space, or you're purchasing access for, let's say QBTS's quantum computer or
Sure.
whatever they have.
I rent IonQ's computer all the time.
What can you possibly do with it? And let's say, like, give me an answer as in, like, what can you do with it now, and then what can be done with it, let's say 5 years down the line, do you think?
Yeah,
like,
so
realistically?
So my girlfriend is a top computer scientist who works for one of the most famous software companies in the world, that she was an early employee of. And she's not a quantum expert per se, but she's very close to the quantum community. And with her, I wrote programs on the IBM Quantum Computing Cloud and the IonQ Quantum Computing Cloud. And we were not able to factor any numbers larger than around 25 or 50,000. Sorry, can you guys still hear me? My phone rang.
Oh, sorry, cut out, yeah.
So we were not able to factor any numbers larger than 25,000 or 50,000 or 50,000 range. These, Tom, please request to come up. These computers, so right now the state of the art is a desktop computer can factor a 200-digit number. These computers could not factor a 5-digit number. We hope that they will get there. But factoring large numbers is not, that's kind of the special sauce that quantum can do. Peter Shor from MIT years ago came up with something called Shor's algorithm, which is this amazing, I mean, this is the reason I love this space. Paradoxically, I hate the stocks, but I love this space because it was a genius, one of the best genius moments in human civilization, where he said, you can use a quantum computer, which at the time was a theoretical concept, and you can factor a biprime, a number composed of two primes. You can factor a biprime in a totally different complexity space than you could with a normal computer. He says you can solve this NP hard problem. And that was incredible. That was a monument to intellect. And we tried to run Shor's algorithm on these quantum computers, but they don't work. The gate fidelity of these computers, in other words, you know what an AND gate and an OR gate is. If you run an AND gate, both inputs have to be 1 for the AND gate to read out 1. The gate fidelity should be 100%. Now, reality is no gates work at 100% fidelity, not even transistor gates that we have in Intel computers or Nvidia computers. But gate fidelity for quantum computers is exceptionally low. It's around 99.9%. In fact, most of the quantum computers are even worse than that. They're around 99.5. You need, the transistor computers we have today are 99 with 18 nines after the decimal. So if you run a computer program that has 100,000 gates or 1 million gates or 10 million or 100 million gates, if you have a 99.95 fidelity or 99.5 fidelity, it will not work, in essence, after the program's big enough. So ultimately, I think that, there's just a fundamental flaw with these computers that needs to be remediated. Now, fast forward to your question, fast forward 5 years, 10 years. You have 99.5 nines, 6 nines. By the way, the last time we got an extra 9 was 6 years ago. So we're getting a 9 every 6 years. It's not going great. But let's say we got 99.5 more 9s. That's more or less enough, I think, to start running these programs. So all you could do with these machines is factor a really big number, possibly even the biggest numbers the universe has ever seen that have never been factored before. RSA is Rivas, Shamir, Edelman, MIT professors who created the idea of public key encryption in the 70s. The NSA of Europe, of the UK, actually theoretically had it before them, but we've been using that for 50 years. RSA still has not fallen, so to speak. And RSA put out these challenge numbers. They put out these very large numbers and said, if you can factor these numbers, we'll pay you money. and no one's been able to factor them. But they also put out like hundreds of these numbers. And slowly, the smaller ones got factored, then the slightly bigger ones have gotten factored. The really big ones look like they'll never be factored, possibly. But with a quantum computer, I do think they'll be factored. The question is, what use is it to divide 21 into 7 and 3? What use is it to divide 35 into 7 and 5? And much, much larger numbers that I can't keep track in my head. What is the use? And the answer is, well, people like the NSA and spies and folks like that have a great use for that because they can crack messages. They can read secret messages that maybe they've harvested or hacked or whatever. And there is a market for that. It's not a huge market. It's in the hundreds of millions, maybe low billions, but it's not a huge market. And it's not relevant to D-Wave because they don't make a general purpose quantum computer. They make an annealer. And it's not relevant to QUBT because QUBT is a former beverage company that decided to become a fake quantum company. But if IonQ or Rigetti can beat Microsoft or beat, IBM or beat Google, then they could have this prize 5 years, 10 years, 30 years from now. We don't know when. So they'd have to, one, beat the big companies who have more resources and, better people, I think. But they're big companies and they're not that nimble. And then two, they have to do this in a time frame that makes sense, which I predict will take 30 years. Maybe it'll be 5. We don't know. And then 3, the market has to be big enough to be worth doing, which factoring primes it's not that clear that's that exciting. So quantum bulls have talked about potentially having more applications, but so far I can't even factor 25,000 into, a biprime version of 25,000, like 25023 or something. I can't even factor that number into its prime constituents. What on earth makes me think that I'm going to ever need this computer to do something important? Because your iPhone can factor that faster. A 5 or 6 digit number, a child can factor faster than a quantum computer. So it really is this weird situation where we have this future technology that could be interesting, but the market's gotten ahead of itself. When has this happened before? Genomics.com. Every time, every single time, and people don't learn their lesson. And history will repeat itself over and over again. The problem is the shorts will get spanked, as I'm getting spanked, and the longs get spanked too. So it's very hard to get timing exactly right. Tom, you've been wanting to say something, so I'm excited to hear from you.
I like that you brought up meme coins earlier because I think the dynamic is really similar. It trades off of momentum and speculation and, bigger loser or, just passing off the back to the next guy kind of theory. But some of these can go for a really long time. If you take, for example, Dogecoin, right? It's a cryptocurrency where the supply cap isn't limited.
Right.
You can create infinite Dogecoin, but still it's the 8th largest market cap of all cryptocurrencies. So some of these things can go a remarkably long time before, so I also am bearish on quantum computing. I understand the technology at least enough to know that it's not, financially viable. It's not a profitable business, and it won't be for quite a long time. But I think it's really just a matter of timing the momentum.
Yeah, and I think for me, timing is one of these things that I'm a little bit different from my peers, where I don't think that timing is something you can do in markets. And a lot of my peers roll their eyes and they're like, no, we got to try anyway. And sometimes we were short this stock Cassava. Cassava was this fake biotech thing. I'm a biotech expert, obviously. And it was very clear to me. I even wrote a paper on it. You can read it on The Impossible. I wrote a 40-page paper about why Cassava the drug cannot work for Alzheimer's. It's impossible that it would work. And rarely do you get to say something like that in medicine. On The Impossible has 2 papers on it, not 200. Because it's rare that you get to put your foot down and say, no, this drug will not work. And I've seen thousands of drugs. And I've seen maybe 10 or 20 in my life where I could have that much confidence. And I feel like, the confidence for me on D-Wave and quantum computing is very, very high. But to your point, I mean, when will the trade work is a whole other question. I've tended to avoid that in my career because I generally find that variable, you can call it lambda or something, that is distributed in a relatively just even distribution. It's normally distributed. So sometimes I'm early, sometimes I'm late, sometimes I'm right on time and I feel like a genius and I time the market. But mostly it's an illusion. And, because the market is not whispering to you, oh, there's a lot of momentum right now. There's a lot of crazy, liquidity right now, and it's all going to go to this stock. Nobody gives me that whisper. I try to divine it, of course. I see Fartcoin up a lot. I see, some of the other barometers up a bit. But if you told me, okay, quantum is going to go, if you told me a month ago on May 20th, quantum's going to go crazy, I would say, okay, so on May 20th, maybe IonQ would be up 10%. IonQ's up 0 right now. It's up 1 penny. Maybe Rigetti, the other big quantum computing company, that would be up 5%. It's down 1%. So it's very hard. There's a stochasticity to the market. It's undeniable, right? And your job, I think, is just to survive. And if you can survive, generally you can profit. And obviously, I took this very big position in D-Wave and I'm paying the price for it, which is crimping my liquidity. It may mean that I have to get out of the trade or reduce it. It may mean that I have to add more capital to my account, all stuff you don't want to ever have to do. But we also praise irrationality while we bash it, right? When you're in the position, you say, I need the market to be rational ASAP. But when you're not in the position, you say, I want the market to be as irrational as possible. I want Fartcoin to be at 10 billion. I want Doge to be at 100 billion. And then I can scalp it really easy. But of course, rationality is not some function of when you enter. Rationality is generally, honestly, I think a function of liquidity drying up. So Doge is one of the funniest examples because it's a mystery to people. Dogecoin is not a meme that's relevant or important. Memes move quickly, but it has this weird staying power. Some people think Elon is oddly behind it or some other explanation that is the reason for Doge persisting despite it not doing anything. And obviously, like you said, it has some technical flaws, but even things like Cardano and things nobody uses Cardano and Cardano's worth billions. And, Ripple is another example. Ripple's worth a fucking 100 billion and it's useless. So I think that sometimes we tend to measure the timeframes in days and weeks because we have to look at our P&L like that. But I can't cash this bet in, but I would say that in 50 years, there is no Cardano, there is no Doge. Maybe there was not even a Bitcoin in terms of a value.
Hilarious.
What's that?
Said Cardano.
Right. We look at Cardano in a split second, instantaneous time, and we say, no fucking way this thing could be worth this much. And then we look at it in a month and we say, wow, it's still worth this much. It's crazy. The market's so stupid. And we look at it.
If I add it to the reserve, I'm going to die.
Right. I just heard something about Charles, who's this total goober who made Cardano, doing something weird with Cardano. But anyway, the point is that I think if we look at 5 years or 10 years, we say, okay, now maybe is there something to this or something like that? But the reality is you're right. Doge has been around for 10 years and it still hasn't died. But what if it dies tomorrow? Nobody would be oh my God, I can't believe Doge is gone. They're going to say, oh man, Doge lived past its time. I'm not surprised it went down 50% or 90% and never came back. They would say, yeah, we could all see this coming. It's fucking Dogecoin after all. And we don't know what the liquidity situation is behind the holders of Dogecoin. God only knows. Maybe Elon one day gets a margin call and says he has to sell his 3 billion Doge and he was the one, perking it up all along. There was a famous story. I worked at this so-called Tiger Cup called Intrepid. Tiger was this big hedge fund that was sort of known for its bold, intrepid moves where it would short a stock if it believed in the short and just never cover. And so the Bank of Sumitomo had a rogue trader. You guys know what a rogue trader is. A rogue trader is a guy that works at the bank or a brokerage or a fund or whatever, and he's secretly putting in orders that he's not allowed or authorized to make. So this guy, Bank of Sumitomo, he's in Japan, he's buying the world's copper supply. Nobody knows, only him. These big banks are so disorganized that you could actually do that. There's a guy that did this at SocGen, Société Générale, the French bank, named Jerome Clerval. There's a very famous trade. He put $6 billion position on without telling anybody. He just found a way to do it. He just picked up the phone and said, this is Jerome from SocGen. I need you to buy $100 million of spiders. And the other guy was like, okay, here you go. And so he kept doing that and it worked. And, nobody caught up to it until they did an audit. Well, this was what happened in the 80s with copper. Bank of Sumitomo kept buying copper. And Tiger kept shorting it. And they said, I don't know, why the fuck is it going up? It doesn't make any sense. Copper is not worth this much. And they kept shorting it. And it wasn't a commodities rally like the other commodities weren't doing great. So it was so aberrant and bizarre. And they kept shorting. And eventually they arrested. Tiger didn't have any idea what was happening in Sumitomo, but they eventually arrested the guy at Sumitomo. The Bank of Sumitomo sold all their copper. They said, we are not supposed to own half of the world's copper. And they dumped it all. And Tiger finally either broke even or made some money. But again, the other positions, made Tiger a really successful hedge fund. They had cassava-like shorts and also great longs too. And you could take the pain on one stock if you're making money on the other ones. And I think that's something that's really important, is that you don't overextend yourself if you haven't built up this nice profit cushion. I've built up a nice profit cushion. I can take some pain on D-Wave because I know it's going to end up like cassava. Now, I could be wrong, and I'm not going to have to lick my wounds and, retreat into my, convalescence for a while. But the reality is I think I'm going to be right, and we'll sort of see how it plays out. But I fully agree with you and understand, this is the paradox of the market. Irrationality gives us our profits, but it also gives us the pain of waiting for them to become profits.
Let me ask you this, though. In your honest opinion, I know nobody has a crystal ball and you can't predict the future, but based off of the current price action and your previous experience with shorts, how long do you think this bubble realistically could last, in your honest opinion? I know you can't.
Yeah, I all my opinions are honest, and I would tell you that I did a table of all of the bubbles I can think of and how long it took for those bubbles to go down. And what was fascinating is I psychologically remember the bubbles popping very quickly. But the reality of the data was they take forever to pop. Much longer than I thought. Not forever. They take about a year on average to pop from their peak. And when I say pop, I did all kinds of statistics on how long did it take for it to drop 50%, how long did it take to drop 75%, 90%, etc. And there was a shipping bubble. If anybody remembers dry shipping and some of these other stocks, there was a huge shipping bubble. There was all these little micro bubbles. And then there was big bubbles in subprime and big bubbles in .com, big bubbles in tulips, big bubbles for centuries. Ever since there have been markets, there have been bubbles. So they take forever to pop. And I think the answer is I don't know. But the answer is also you have to be prepared for the stocks to drop 90% tomorrow, the stocks to drop 20% tomorrow, the stocks to stay flat for 6 months or any other arbitrary number of time. And you have to be prepared for the stocks to jump 50% or 100% or 300%. I don't think you can know. But you have to be prepared for a generally wide distribution of possibilities, including multiple X's up. Now, somebody would say, if you think there's going to be multiple X's up, you would buy it. Of course I would, yes. But I don't think that's going to happen, but I have to be prepared for it anyway. I don't think my house will catch fire tomorrow, but I still have a smoke alarm. So I think that by having a 5% position, let's say it goes up 3X, I survive. Do I want to short more? Well, I might not have the choice. I don't have the capital, but I maybe could short a little bit more. But if it goes up 5X, I'm really going to feel it. If it goes up 50X, I'm out of business. So I can't survive that wide of a distribution. Now, the thing about longs and shorts is nobody can survive a long enough distribution unless you don't use leverage at all, you don't short at all, and you are very diversified. Because otherwise you could survive nobody could survive a relatively permanent loss of capital unless they have some amount of skill. And, like I said, we shorted cassava, we shorted galactic, we shorted humicide. We had a couple of good trades in the last six to 12 months. So I'm very happy to sort of, take a little pain. Any amount of pain is more than I want. But I also recognize that markets have stochasticity. They don't become rational when you snap your fingers, even though you want them to. The second you buy an undervalued stock, you hope that private equity takes it over. for 50% premium. The second you short a stock, you hope Muddy Waters comes out and writes a short report, it's just, or and the stock drops, or, the SEC arrests the CEO and the stock drops 90%. That's what we hope. But reality, unfortunately, does not comply with that. You have psychologically, kind of people searching for dopamine rush. They want to buy a stock. Look at this stock. It's up 30%. If I bought on a margin, I'd be up 60%. If I bought calls, I'd be up 600%. How else am I going to get myself into financial freedom? But if I have $50,000 and I 600% my account, I can quit my job and et cetera, et cetera. These are the kinds of things that go through people's minds when they buy a stock like this. And it becomes a self-fulfilling prophecy until it all kind of comes crashing down on a lack of fundamentals. Anyway, Robin, you've been waiting for a while. Shravan?
Hey, hi. I think I'm audible now.
Yes.
Yeah. So I have some limited experience with the equity market, but I know quite a few things about crypto. And recently, as we all have seen, Bitcoin going from 20K to 100K in around a year. But it seems like it will be unlikely in the future, the similar trends. So at a high level, it appears to be that Bitcoin is like the Nvidia of crypto, and Nvidia is Bitcoin of tech stocks. But at the same time, I am not much aware about the historical movements of the Nvidia stock. So I just wanted to ask you, how do you compare the hunt and promise of the next Nvidia to the next Bitcoin?
Yeah, obviously we're here to talk about quantum, but I think I get what you're sort of saying, analogy-wise. And I think what's interesting is there's not been a next Bitcoin. And in fact, if anything, Ethereum and these other kind of second-run cryptos have kind of if anything, fallen, and Bitcoin dominance has been increasing. Because I think
Solana and Ethereum are scam technology.
Yeah, so ultimately what ends up happening is this is why the majority of wealthy investors are fundamental value investors, is because ultimately you have to look at the earnings. All the momentum, all the psychology cannot provide the substance. The substance is I sell a product, my customers love my product. When Sam Altman buys $10 billion of Nvidia chips, he thinks he can make hundreds of billions with them. When Elon Musk buys $10 billion of Nvidia chips, he thinks the same thing. Nobody's buying the quantum chips thinking that they're making any money. One company is buying, one institute, not for profit, bought one computer from D-Wave. That's the one computer they sold in 5 years. They're buying it to study it and to write papers about it. They're not buying it because they think that it's going to be something useful and profitable. They're buying it because it's cool. Now, could these work someday? Yes. Could they be useful someday even? Maybe. When is someday, and how useful is useful? And those are the things that are the questions that I'm, again, skeptical of. They may be proven out a long time from now. And in the meantime, speculators will run rampant. But speculators get bored, and they ultimately have to ask themselves, what are the earnings? Because Nvidia sales, they've gone from, I looked at their revenue yesterday over the long run. They were about $1 billion. Then they went to 5 or 6 billion. They hung out there for about a decade. Then they went to 10 billion, 20 billion, 50 billion. They might do 250 billion in revenue next year. $250 billion of revenue. That's a real company that's selling real products that people love. Bitcoin.
They went from 50 billion to 250 in a year.
They are. We'll see what they do this year, but they about 3x their revenue twice in the last few years. Let me give you the exact number. I'm skipping years there, but 250 is the estimate for 27, 200 is the estimate for 26, and 130 is what they just did. These are fiscal years, so they just did 130. Let me maybe make it easier and give you the last 3 years. 27, 61, 131, and now they're expecting 200. So from 27 billion to 200 billion in just a couple of years. That's a successful company. They have a great product. People love their product. Their customers fight to get their product. these other companies, again, IBM gives away their quantum cloud. They give you 10 minutes of free time every month. And even then, I can tell by looking at the queues, nobody's using these computers. For IonQ on AWS, I predict that almost all of IonQ's usage on AWS comes from me personally. Nobody wants to use these computers for anything. They don't do anything. As I mentioned earlier.
A good way to predict future growth for like all these industries like AI, blockchain, quantum computing, etc. is the amount of academic research that's being done on a year-over-year basis. So like if you look at
very interesting
research, it's pretty flat, like over the past 10 years. And if you look at AI, it's gone pretty much exponential.
Parabolic, yeah. That's a fast. I've never once in my life thought of doing it that way, which is really, this is why everyone asks, like, why do you host public forums and all this stuff? And I've read academic research since I was a baby, practically. And I never thought, I've graphed it for various things, but I never really connected the dots of graphing them as a future indicator. But I really like that. And quantum research has actually gone the other direction where, you're telling me they're flat, which I believe is true. But if you talk to like the really smart people out there who are like the newest, freshest grads at the best schools, they do not want to be in quantum. That's like, if you told like me, somebody at MIT is like, I want to do quantum computing, a top, like the valedictorian or something, everyone would look at that person like they're crazy. Like, well, this is like a dead field. Nobody wants to be in quantum because it's just not that interesting. It's an interest. AI is interesting. Deep learning is interesting. Robotics is interesting. Nobody wants to be in quantum because there hasn't been any movement in the field in a decade. And even IBM, one of my favorite data points on my short here is IBM quietly, completely scuttled their plans for the next 2 years in quantum. They used to have, and you can find this on the Wayback Machine very easily. The Wayback Machine doesn't have like really old stuff, but for the last like 5 or 10 years, they have like every day archived to these websites. So if you go on the Wayback Machine, you'll see IBM said that they would have 1,000 qubit machine this year and a 10,000 qubit machine next year. That's a lot of qubits. They've completely taken that off their website. They are not planning on doing that anymore. They want to focus on what I was saying earlier, which is gate fidelity, getting that up to 99.99 or 99.999 or more. Every nine is one step closer to where we need to get to. But again, to what end? What do you want to do with these things? I want to factor prime so I can do what's called the discrete logarithm problem on elliptic curve cryptography and hack Bitcoin. That's my goal. That's why I'm so interested in these machines. They're fascinating scientifically, but they're also quite interesting from the Bitcoin perspective. I don't want to steal Bitcoin or anything.
How do you think it could affect ransomware from both offense and defense?
Yeah, I was going to say it kind of is good from a defense perspective, right? Because it's a tool to say, I can crack any ransomware. But the NSA has like, again, what you want to believe about NSA is up to you. But NSA has already done the work on this, legitimate work on this, which is they created 2 post-quantum PQC, post-quantum frameworks. One is called dilithium. The other one's called Kyber. They work on different types of math that are not...
Yeah, I think Apple already put one in iMessage.
Exactly. Like, you can already defeat quantum today. So the idea that I have to wait 20 or 30 years before I can beat RSA, well, in 20 or 30 years, yeah, I still probably would want a list of spies that live in my country or something if I'm NSA. But it's really not that interesting. 20 or 30 years from now, we'll already have moved to Kyber. We've already have moved to dilithium, lattice-based cryptography, other areas that are quantum resistant. So why the excitement? And it's mostly, it's like a tradition in technology where people get more excited about what they don't understand more than what they practically do. So like AI is a good example. I have my friend Yaroslav's here's a top AI guy, worked at all the top AI companies. There's this mystique around this from investors. Investors want a lot of times what they don't even understand and what's just so emergent that nobody understands it. And a great example is SSI. There's a company called Safe Superintelligence. They have a brilliant guy who's running the company, many brilliant people who work there, but it's a brand new AI company and it's worth $10 billion or more. I think they're going to raise money.
It's worth 40 now.
Yeah, they're going to raise money at 40. They don't have a product. They say they're not putting a product out anytime soon, but they have a brilliant group of AI researchers, and that's great. But as reality starts to dawn, companies get a lot more boring.
Do you think they have anything proprietary right now? Or
Listen, this is
absolute crack engineers.
It's a lot of rumors, and there's a lot of stuff. There's some people who say yes, some people who say no. But point being that when you have something that sounds amazing, CRISPR is maybe my best example here. So I'm a biotech guy, as you guys know. CRISPR sounded incredible. Wow, imagine being able to edit the genome. This sounds amazing. CRISPR stocks peaked at the exact time of the most uncertainty about how you could use CRISPR. They did not peak when the technology became more tangible. When the technology became more tangible, the people in biopharma said, oh, this is actually a lot more boring than we thought. Turns out that we can only CRISPR certain things. Turns out if we do want to CRISPR lots of things, we have to use, conditioning regimens, which are basically chemotherapy. It turns out CRISPR is just not that cool. And it sounded better when it was science fiction. And quantum's sort of the same thing, and many other things turn out to be the same thing, where even AI sometimes, there are a lot of people predicting the death of AI, where we're not going to quite return to the disappointment of expert systems of the 80s, but there's a little bit of this wonder about, have LLMs topped out? Are we at this place where we're going to get this awesome chatbot that's really smart, but that's it? What you see is what you get.
LLMs may have stopped up, but the idea of AI, that doesn't even make sense.
I agree. It's probably never going to top out. But I guess from the perspective of, let's just like very practically, will ChatGPT 5, the distance between GPT-5 or ChatGPT 5 and GPT-4 be bigger than the difference between 4 and 3 and 3 and 2 and 2 and 1? It seems to some people, I don't necessarily agree with this, but some people believe that maybe that distance is going to get smaller and smaller. I don't know. But I think that is what, is concerning some people, that, okay, is this all we're going to get out of AI, or is there going to be another quantum leap someday? And of course, someday, there will be, but is it coming soon, or are we stuck now in a new local minima where, we got LLMs, really cool, but we more or less have chained the whole internet, and synthetic data and all these other techniques. And this is it. This is what we get for the next 10, 20 years. And that would be a huge W, right? Like, there's nothing wrong with that. This is one of the most amazing technologies ever, but we want more. And the reality is we're now starting to turn our eyes, especially if those deltas get smaller, we're going to start to turn our eyes to things like revenue, users, earnings, costs, like the boring stuff. And investors hate that shit because, you actually have to realize the dream is over. It's now about basic business, and what's the basic business look like? And it usually looks a little bit different from the dream. Sometimes, you get a business miracle. But oftentimes the dream of the investor, the changing the world, and the reality look totally different. And, Uber is an example of a company that kind of delivered on both, but there are many companies that tried to be Uber and didn't. Telehealth is another good example where like HIMSS has been like the sole success story. Everyone else has bombed out, and the thesis makes so much sense. And you can just hear the pitches of the young, eager students going to the A16Zs and Sequoias and saying, healthcare has been a big waste until now. We're going to optimize the world's most, inefficient market. And a guy unveils the app, and it's like, wow, this is going to be the next, Facebook. And they invest, and it turns out that revenue topped out at 30 million and it's low gross margin. it's a dud, So I think that most of the technology kind of ends that way. And quantum is, I think, not going to be any different. We're talking about AI and blockchain, like different levels of success and different levels of use case and usefulness. And I feel like, again, the one thing going for the quantum bulls is that these market caps aren't that high yet, right? And I think we're in this new normal of liquidity where there's
volatility is what brings the traders in.
Right. But also market cap's important because I think crypto showed us that maybe it's not as important as the stock guys think, but the stock guys, at least, I would say that the market cap is the ultimate magnet or the gravity force, where it's like, look, after enough billions in market cap, the both the shareholders and the short sellers and just the market in general start to say, nah, I'm not going to let D-Wave become a $25 billion company. I'm going to sell it. I'm going to short it. The founders that own 1 or 2% are going to say, I'm out of here. I just made $250 million. The IonQ guy, the IonQ CEO quit and sold all of his stock, and he sold 40 million worth. And everyone asked him, what are you doing with the 40 million? He's buying a house. He decided a house is way bigger to him than the quantum computing revolution, So I feel like, there's market forces like that where, whether the market gets it today or tomorrow, they'll eventually sort of figure it out and move on. So I don't know. Any other questions? Any opinions?
I just wanted to ask, I guess this is something that a lot of viewers kind of want to know. And it would be, what are you planning to do? Because you're in a heavy short position, clearly. I think you mentioned you were down 35%. Is that correct?
Yeah, that's on the sort of portfolio I trade publicly. Yeah.
Yeah. So what are you planning to do? Because obviously you have a ton of conviction, and I agree with all your points regarding quantum's future and the fact that it's not ready yet. So what are you planning to do with both your personal portfolio and the portfolio that you have on that you demonstrate, that you show on Godel? What are you planning to do with it in terms of, you're going to double down and then push harder and then obviously reap the rewards if it does crash?
Yeah.
Certain price, you're just going to quickly exit your trade so you don't have to feel the pain, if that's so to speak, as it keeps going up, because it's already at 1750. I don't know what it's doing right now. It's going crazy.
Yeah. I mean, I'm down a few million on the trade, and it's very painful. But I have a few choices. I can liquidate everything I have and just go crazy on it. I can even, you can even go further than that. I can go raise a hedge fund that just shorts these stocks and raise $100 million or something like that. I don't know how much I could raise. Maybe 100, maybe more. Who knows? And just literally make this the biggest bet I've ever done. Or I could be more reasonable and just sort of okay, I'm going to ride out my position that I have. If it gets into the black someday, great. If it stays in the red, it is what it is. But I will say that as it goes up, I have to find capital to sustain the trade. And nobody wants to do that, right? Because your P&L is red and your buying power drops, and you have to keep adding money to sustain yourself. So at $30 or 40 or 50, you're sitting there saying, okay, I'm putting more money into this trade because I'm just trying to survive the trade. And when it goes back down, I'm only going to be recouping some losses. I'm not going to be making money. To make money, the thing has to go to single digits. So, it is one of these things where adding to it is takes a lot of guts. And I'm considering doing it. I've added a small amount, but at this point, I'd really have to start thinking hard about do I really want to be all in on one stupid stock that could still double again? And I think if
you martingale this, you can't lose. If you have potentially, enough leverage, you can't lose if you martingale this. It's going to go down eventually.
GameStop, they said that about GameStop, and Melvin, I don't know Gabe well, but Gabe worked at Tiger Cub as well. And
I don't think martingale works with shorting.
So Gabe worked at a Tiger Cub called North Sound, which I was close to, and Gabe went to SAC. North Sound kind of wound down a little bit, and then at SAC he was one of Stevie's best traders. So he had one of the biggest portfolios at what's now called Point 72, and he started his own firm, Melvin. Melvin, did really well. He got more capital. People were fighting to put capital into Melvin. We all know what happened next. The GameStop trade happened, and the question became, what's he going to do? And Steve Cohen's got pretty deep pockets, and so does Ken Griffin. And they both wanted Gabe. He's super talented. He's a really good stock picker. But he got caught in basically a 200 sigma event. GameStop there's never been anything like it before. And I've seen it all. And it makes every other short squeeze look pitiful. And so it happened. And both guys, Steve and Ken, were willing to give him a couple billion apiece to bail him out and stay in the trade. Because they said the same thing. The company is useless. It doesn't make any money. GameStop is the whole asset. Nobody disagrees. Even the CEO of GameStop, I don't think disagrees. The whole thing's maybe worth 500 million, $1 billion at tops. So when it traded for, 100 billion or something, they said this is ridiculous. This is, you wait yourself out of this, etc. But the problem became everyone knows you're in this trade, Melvin. Everyone knows you're in this pain. We're just going to keep squeezing it until you exit, and you're the exit liquidity for the squeezers. Now, you can see how that ended. It all went to shit, back to $20, down 95% from the top. So everyone loses. The longs lost, the shorts lost. It's just chaos.
So was he forced out of that position?
Yes.
Oh, okay.
So
I guess it depends on what your starting position is when you're doubling down like that.
Exactly.
For sure.
Exactly. And if you can raise more capital, that's kind of the secret weapon, because, there's a lot of smart investors out there. And if you scale all the way up to okay, I'm going to go to Adia and Audic. These are the investment firms of Abu Dhabi, the state of the country. And you go to them and you say, okay, I have a great, you have a good relationship. You made the money in the past. You say, I need $5 billion to short these stocks. They might do it and say, okay, go ahead. Here you go. You made us money before, Martin, or whoever it is, Gabe. Here's another $5 billion and go to town. And, you can raise the capital, do that. It's great. What typically happens in both hedge funds and personally is that your capital position is dropping as you're losing money. And personally, of course, your buying power and capital position are dropping. In hedge funds, it's even worse, where your capital position is dropping and, your investors want their money back. So if you're in Melvin, you're sitting there saying, okay, let me get this straight. I put money in this fund. It went up 20% a year for 6 years, made a lot of money. And now almost all of it's gone because of this one stock. And at this rate, all my profits are gone. But soon all my capital is going to be gone if I don't take my money out. I'm going to put in a request to take my money out the soonest available time. And that means that he has to get out of the trade because he doesn't have any capital left. So being in a hedge fund makes it 100 times harder to sustain these. And the only people that really want to short are a couple of crazy individuals. Most of the individuals are long and often leveraged, and even leveraged with options. And hedge funds that are very sensitive to not being Melvin. The hedge fund world now, the Citadels, the Balyasnys, the .72s, I take nothing away from them. They're fantastic firms. They are very, very, very risk averse to shorts. And if your short goes up, the risk manager taps you on the shoulder, or the portfolio manager before that, and says, we're out. We can't sustain the short. It's too scary. It's too dangerous. And this kind of creates this rocket fuel for longs in a way. But again, it all tends to crash on itself when reality shows up, and reality says, what are the earnings of this company again? Why would I buy this company that has no earnings for $4 billion when I can buy a real company for $4 billion? And again, if you ever have to do the reality check, you just basically say, would you rather own all of the shares of D-Wave or 15 well-known skyscrapers in Manhattan, which you can buy also for $4 billion? And what would you leave to your kids? 14 skyscrapers or shares of a company that are all of the shares of a company that, look not so great, but the stock has been hot. Needless to say, everybody would say, give me the 15 buildings that have been here for 100 years. These are really valuable core real estate holdings in Manhattan, the best city in the world. I'd rather take that. Or $4 billion of S&P 500 stocks, or a sports team like the Cowboys, probably worth about $4 billion. These are the kinds of assets that I'd rather have than D-Wave. And it really doesn't take, the funny thing about investing is, it doesn't take the brain power of a brilliant computer programmer or a great entrepreneur. Nobody is not smart enough to see that this company is in shambles and kind of a scam. But the price is the tantalizing, kind of siren singing to you and lulling you into this belief that, oh, this is exciting. And that siren is very hard to ignore sometimes.
It might be close between the Cowboys and the shares of D-Wave. The Cowboys are pretty shit.
It is America's team, but no, you can, if you go to Carlyle or KKR or like other big PE investors, PE has been a great asset class, and you say what can you buy for $4 billion? They would say, oh, I could buy a chemicals company that makes $400 million a year. I could buy a HVAC company that makes $600 million a year. I can buy this kind of rundown optical company that makes $200 million a year, but if we cut some cost and spiff it up, maybe it could even make $1 billion a year someday. These are the kinds of things you could buy, but for $4 billion, you buy D-Wave that has $8 million in revenue and no earnings and never will. It's a gamble. It's a lotto ticket in the stock market. And look, lotto tickets have value too. Biotech is a group of lotto tickets. But if you look at biotech, it's actually been one of the worst asset classes for the last 15 years. And the lotto tickets are all, very much, trading at very low prices. But these lotto tickets are really exciting, and the meme coin lotto tickets are really exciting. Why? Because they recently have had price increases. But you can look at the faulty logic here. Like, it's gone up before, so it will go up again. That is literally the logic of a lot of traders. And, the reason that logic persists is because it kind of does work. Momentum tends to work in the market. It just works until it stops working, and then, look out below. It just all sort of drops very quickly.
So what I take from your Bitcoin words is like it needs to go from this speculative phase to more of adoption and real world use case. But like unlike AI, like I've seen so much of societal aberration and even governmental friction. So it appears that the adoption is going to be slow, gradual, and even generational. So from that point, like Bitcoin and crypto appears to be like will always be in, or for a long time be in this speculative phase only.
Yeah, we don't know is the beauty of markets, right? Like the markets discount the future, and clearly the current activity of crypto is absolutely nowhere near where it would need to be to justify their current valuations. But that's the whole point of a market. The market tells the future. The market understands that whatever it is about Bitcoin, there's something special there that will persist. At least that's what the market's telling you today. Market can change its mind a second ago, right? A second from now. But the market, let me just finish real quick. Just real quick. The market tells the future for lots of things, but it's not perfect. It did not tell the future for cassava, whose shares went down 95%. But it did tell the future for companies like, you'll buy a biotech company, for example, that is preclinical, meaning they just started testing animals, but it's so hot and exciting. The CEO is really good. The science is really great. They're the only player in that field. And the company's trading for $2 billion or $3 billion, and they just started an animal study. And then you fast forward a couple of years, and the stock's still $3 billion, even though they have now gone through phase 3. The drug's almost ready for FDA approval. What happened? The market figured it out a while back. The market knew at phase 1 what it would be worth 5-10 years from now, and it valued it appropriately. The market is a valuation machine. It is a crowd consensus that usually determines the fair price by absorbing all the information, calculating, and saying this is the fair price. And markets are very, very efficient. In fact, they're the most efficient tool we have to value things. So you might be thinking, well, then why isn't that the case for quantum? And it's a really damn good question. And the theory is that, well, maybe the market's saying, no, quantum, there is something to the future of quantum. But the problem is markets obey many masters. They obey the master of logic, but they also obey, in the long run, the one and only master, which is earnings. And Buffett's made a living, as many others have, of defeating efficient markets hypothesis by being patient. And Buffett's it's not his most famous saying, but I think one of his best sayings is markets reward people by moving money from the impatient to the patient. And shorting is something Buffett doesn't do. But it's kind of one of these things that can require quite a lot of patience. And the best way to have patience is to, 1, have experience and have done it before, and 2, have a lot of capital. Because the short, unlike a short can really stress you capital-wise. generally it's not going to be that big of a deal. I mean, a stock doubling while you're short is like a stock going to zero. It's not that hard to sustain. It's hard to sustain what GameStop was. It went from 20 to 200 or 8 to 400. Sorry, that's hard to short. That's hard to sustain. And just the simple fear of that ever happening again is enough to send grown men into the fetal position, scared for their life that could happen to them. And it makes sense. Money is important, serious. You can't lose it. But, being that afraid of the boogeyman is something that's probably a little too scary. But, for me, I'm sticking to it. I'm willing to, again, I don't have a plan where at $40 or $50 I would, sell this and borrow that, and like this is what I would do. I would make it sort of a game time decision depending on other things. Like for now, I really like the short because Rigetti stock is not up, IonQ stock is not up, QUBT stock is not up. It's not like if all quantum stocks were up 30%, I would be much more nervous and be like, oh, this is a mania. It's a crazy mania that keeps going. This is like really contained to this one stupid stock, and eventually people will get bored of it and it'll go back to where it came from.
Who do you think's buying right now? Institutions, or is it just Robinhood idiots?
I think it's Robinhood idiots. I mean, I talk to a lot of institutions, and
it's a lot. It's like the most traded stock on the market right now.
I didn't believe
massive amount.
When I was in prison, which is a funny thing to even say out loud. I hope none of you ever have to say those words. But when I was in prison, Tesla stock was going crazy, and I would call my former colleagues, friends, hedge fund people from the prison phone, which is hilarious because every 5 minutes it interrupts you and says, this call is from federal prison. And so anyway, I would call these guys who are, trading huge portfolios, and I'd be like, what's going on with Tesla? And one of my friends was like, no, Tesla's doing a gamma squeeze right now. And I said, what are you talking about? And he said, people buy the call options. The market maker sells them the call options. They have to buy the stock, which has 100 delta, to hedge. As they buy the stock price goes up, and that the out of the money call options go from low delta to medium delta, forcing more delta hedging. I never bought this, but a lot of people use this phrase gamma squeeze to indicate that like you can force a stock to go up. If you go out right now and buy enough, let's pick a stock, D-Wave's at 17. If you go out...
GameStop was the gamma squeeze.
What's that?
The GameStop was the gamma squeeze.
That's what people think. Again, the funny thing about markets is you can't really exactly prove it. People traded the options, but people trade the options on everything. Was it a gamma squeeze? So sometimes this is like what the French call esprit d'escalier, which means like it literally translates to the wit of an escalator. But the idea is like you come up with the reason after the fact, and it's hard to actually say what happened because clearly here's a few things that could explain it, and it's probably a mix of everything. One is that longs refused to sell at prices where they knew they should have sold, like 200 or 150 or whatever, and they waited and they didn't sell. Shorts capitulated. Options buyers bought and made a lot of money, sold or exercised those options and used those to buy even more options. So it's just basically a feeding frenzy. So when I hear the word short squeeze, I also hear long squeeze. I also hear seller strike. The sellers go on strike. The shorters go on strike. The shorts look at it and say, I don't want any piece of this shit. I wanted to short GameStop at 70. I remember sending an email from prison to my guy who was handling all this stuff for me while I was away. I was like, you should start shorting this thing at 70. Then I called some other folks and I was like, let's get some money together. Let's short this thing. Before I know it, it's at 400. And I'm like, thank God I'm don't have great communications here because I probably would have done that. And then of course it went from, 400 to 20 and I would have made money if I shorted it at 70 and held in.
Yeah, but that's because they forced everybody to sell it.
Right. That's another theory, but I don't.
They fucked everyone.
I don't buy that theory either. I think the markets more or less work the way markets do, and when Tilray went from 2 to 200 to 2, right now it's 40 cents. It's just mania. Manias happen. People go crazy. They look at something and they say, this is the next thing. Oh my God. I'm so excited. But again, I think the key is not to point a finger at anybody and say that was stupid. It shouldn't have gone to 200. I think the key is, how do I profit from this? How do I make money? How do I grow my trading account? And there's 2 or 3 answers. One is, the old Soros saying, which I don't think he actually ever even did, but he said, if there's a bubble, I go to buy and inflate the bubble even bigger. And I really like it because the bubble is pissing everyone off. Some people do that. That's great. If you can make money doing that, fantastic. Some people think that they're actually buying something useful, like an internet stock portfolio. I remember there were 2 internet stocks we shorted in 2000 that were portfolios of internet startups. One was called Internet Capital Group. The other one was called CMGI. And neither was, ended up having a single company that succeeded, even though they had like 20 internet startups in each. And those stocks all went down 99%. They all went bankrupt, basically. So some people actually believe that they're buying something really valuable. But a lot of the buyers are just in it for something that's moving a lot. And the shorts are in it because they know there's a zero. But both run huge risks. The long buyer is buying a piece of trash. It's going up very rapidly in price, but it's a piece of trash at the end of the day. It's kind of hard to really stomach buying too much of it. But you get rich doing it. Imagine if you bought D-Wave at $1. It's at $17 now. It's amazing.
So it sounds like based off your current bleed rate for your short position, it sounds like you're very, looking at this very short term. Because based off the way it's currently pumping, I'm pretty sure, that you can't sustain such losses for more than, I don't know, would you say 3 weeks if it keeps?
Well, I mean, I'd put it on a price number, not a time number. But yeah, I mean, if it were at 100, I would say that would be probably enough to capitulate me. But I don't have a problem if it goes to 30 or 40 or 50. And
so if it went to $30, you would still hold this short?
Yeah.
Wow. That just shows the conviction, eh?
Yeah, I mean, like I said, look at the Sumitomo trade. Look at the .com trades. There are people who short, in 2000, Druckenmiller and Soros were short all the internet stocks. So was Tiger. Some of these stocks went up 20x. This isn't that bad yet.
So I have a question. Why would you not short with options instead of exposing yourself to unlimited risk of naked shorting the shares?
Yeah, I mean, there is generally parity with options with equity. So there's no free lunch. So you make trade-offs. If you buy puts, you're making a lot of trade-offs. Yes, you get defined risk. It's wonderful. But you have a very bizarre payoff structure where your break-even is very, you need to be right to break even, and you're time-bound. So options present you with partial solutions and partial problems. So, I generally kind of, if I do try to hedge or be cute, I sometimes will buy options. I'll buy long calls to hedge my short. So if it goes really crazy, I kind of lose less, if that makes sense. But in general, I just try to stay away from options. I know other people are better at them and, like to use them. If the vol was really low, the implied vol, I'd be the biggest options owner there is in this thing. I would buy 50,000 puts. Yeah. So if anything, I kind of want to sell those puts more than I want to buy them. But in any event, I mean, I think the nice thing about this is it gets so much attention. This is the biggest traded stock in the world. So JP Morgan's hosting a quantum call or quantum mini conference. And I think D-Wave just spoke at it. And anybody listening to this is going to listen to it and be like, oh, this stock has no business being the most traded stock in the world. This thing is complete trash. There's no way this is a cool company. And, there are privately held quantum companies that are seemingly at least a little bit more interesting. But even Google's Google and IBM are I think honestly, even though the CEOs are talking because the public is talking about quantum. I think the people, if you talk to the actual people that work at Google Quantum or IBM Quantum, it's pretty morose out there. There isn't a lot of hope that you could actually get these gate fidelities down a lot, or that you could scale the actual systems. So like ion trap is a really interesting system where you have this chain of atoms. They're ions in this case, but some people use neutral atoms. And you have this chain of atoms that are like, microns apart, and you can only fit so many on a chip. And what they want to do is take these ion traps and link them together somehow, which is like even crazier of an idea. Now, again, Elon's landing rockets straight up and catching them in air. Anything's possible with technology, but there isn't a lot of hope that you could actually make a real functional scalable quantum computer. I think that the companies that are trying it, some of them have been trying for a really long time and have really not gotten anywhere. So the metrics in the industry are not really going in the right direction. So that gives me a lot of faith as well. And again, the rally's not broad-based. It's just this one stupid stock. So like across the other quantum positions I have, I'm doing fine. And in some cases, it's even up. So it's really not that big of a deal. And I have a long portfolio. I'm not just short. I mean, I have a bunch of good longs too. So it's not like, some really crazy thing, but it is pretty crazy. I mean, this isn't, but I wouldn't call it unprecedented. Like there are precedents, but the precedents are nuts. So the precedents are
GPUs and TPUs. Like, what do you think the next major compute paradigm is going to be?
Nobody knows, right? But the first question I'd say is why won't GPUs scale more? And then because it does seem like the
if you can do like 3D stack, I've done research into that stuff, but like.
Oh, interesting. Yeah, so I know this space pretty well. So TPUs are obviously like kind of a Google thing, although there's Grok as well. There's neuromorphic, which you mentioned earlier. There's probabilistic computing, which our friend Beth Bezos is working on, as well as some other companies, which are sometimes now being rebranded as thermodynamic computing. There's always DNA computing, which is kind of never taken off or worked, but it's always sort of in the background. I would even call it like biological computing, because like people are growing neural networks in vats. That's possible. I mean, I wouldn't underestimate like some production breakthrough. I think that's kind of like almost in some ways the best way to do this is fabrication kind of optimizations. I don't know how many orders of magnitude you get from that, but if you look at kind of like Sam Zalouf is doing with his company, I had a friend of mine say that Zalouf's company is the one company in his portfolio, it's a VC, that could be $1 trillion company, or even have $1 trillion in revenue someday. And if you think about like what fabs are, they are in essence, gating factor. The semiconductor tool chain is the gating factor to like human nirvana with more GPUs. Imagine if it was so easy to make, you can make an Nvidia GPU, an H100 for $50 in 5 seconds. That would be an incredible world to live in. That's not the world we live in, but a company that's helping to make that world possible could be not only a good investment, but a very valuable company. So I think like we have a lot of ways to do compute really fast. I think the question is, how do we make more of the computers, not make the computers faster? Both will help, of course, but I don't know that we even need to worry about the substrate as much as like, what's the easiest way to make a computer? I had a friend tell me that the best computer for hacking is the PlayStation 3, I think, where for $100 you can you get this extremely fast floating point processor that is unbelievably energy efficient. I don't know how many PS3s were made, but the idea, obviously, I don't think this is even true, by the way, but I think the idea is intriguing, that what you're really trying to find is the lowest energy cost unit of compute you can find. And maybe that's neuromorphic. Maybe that's...
Yeah, neuromorphic.
Yeah.
I asked you about that earlier.
Yeah. I mean, Intel bought Nirvana, I think it was called, and a few other companies to try to...
Plus, isn't neuromorphic computing supposed to be like optimized for AI, or like
Yeah.
kind of essentially like designed for it?
The problem is, AI programmers, some of whom are in this chat, like, you work in CUDA, you work in PyTorch, like you only work on stuff that actually you can program on. So like getting a working neuromorphic computer and then getting all these libraries to program on, that's a long way from now. AMD can't even get people to use the AMD library. So, trying to get people to use a neuromorphic library or some quantum computing library where like the average programmer is like, I don't want to use AMD, get the fuck out of here.
It's way out there,
right? So I think that you got some time, but PsiQuantum is doing optical quantum computing, which is a sort of another idea. What is a qubit other than, something that has a quantum effect that you can control? So there's like lots of different qubits: superconducting, neutral atom, trapped ion. Even Microsoft has the Majorana idea, which is a totally different state of matter. There's going to be more types of qubits. I think there are more missing. So I think exploiting nature to do computation is like what computing is, and we'll find all kinds of ways to do it. I've seen papers about using magnets to do very elaborate things to solve primes. So I don't know. The future is bright, but I think the prices we pay for that brightness are the question that I care about. And I'm very convinced that I'm right on this, but I also like we've all talked about, like finding the timing and capital and wherewithal, even the mental stamina to not give up can be very challenging. But the good news is I've had a lot of experience over 25 years of seeing the same movie play over and over again, where the Pollyannas, and quite frankly, most of it is not Pollyannas. Like, as you can see here, nobody's shown up and said, Martin, you're wrong. Quantum's the future. Not a single person. Everybody said, well, I don't know. Can you hang in? Are you going to double down? What's going to happen if it goes up again? It's much more a poker game than, oh, no, you're wrong. It turns out that Grover's algorithm is more, applicable to NP hard problems than you think. And here's why Grover's is, real. And then I'd say, well, Grover's doesn't even change complexity class. You don't get an exponential speed up. You get like this sublinear subquadratic speed up. Nobody wants to have that conversation. The conversation is, this, again, I'm not insulting anybody here, but this sort of drooling, squeeze, line go up, this kind of like, this kind of like Neanderthal question of like, how much will line go up? Will line go up so much you lose? Like that is the question. And that's fine. That's a poker game. I played this game a lot and I think I know how to hang in. But at the same time, it's a poker game you can't lose too. So, there's one person in my chat on YouTube who said, no, you're wrong. It is the future. I said, well, come on Twitter and tell me why. But, again, for all I've sought out and searched, I can't find a single person on Wall Street, on Main Street, in the VC world. I can't find anybody that wants to defend quantum.
Yeah, it's a solution looking for a problem. It's the same thing with blockchain currently.
Yeah, blockchain is pretty similar. I will say blockchain did have a major breakthrough with stablecoins.
I guess, yeah.
Yeah, I mean, if you've ever... Now, it's a niche solution, but I ran a drug company that had offices in Switzerland and bank accounts in Switzerland and New York. And the problem we had is if we wanted to send money from Switzerland to New York or vice versa, it was a 2-day wire process where we had no idea where our money was. It was a huge fee. It was like 6 bankers that all had to orally authorize the money. And, it's fucking nonsense, right? And
and now our government's starting to embrace stablecoins because it helped to stabilize the treasury market.
Exactly. But, in terms of like, why can't I PayPal $10 million, from Switzerland to New York in 1 second? The day I laughed at Bitcoin my whole life until 2014, I bought some Bitcoin to bet on Monday Night Football. Yeah,
that's when I first started getting.
I got the bet wrong. The Patriots amazingly lost the first game of Monday Night Football, but I bought Bitcoin for $400, and I was like, "This is awesome! I now get it." When I was pitched it at 100, we almost went short it, and there was nobody who would do the short. But at $100, I didn't get it. But at 4,000, not 400, at 4,000, I went long and I said, this is actually awesome. Like I now fully get it. Having done an actual Bitcoin transaction, everything clicked in my head that like, this is cool. Now, does it mean like it should be worth trillions of dollars and it's not a short now or it's like a really good long now? No, I mean, that's a totally different question. But the idea of having this like permissionless money you can zap anywhere instantly is a great idea. And stablecoins kind of solve the problem of, well, I don't want to send somebody Bitcoin. I want to send somebody something that's quote unquote valuable. Of course, fiat and Bitcoin are the same thing. Government issued fiat, you might take a little more seriously than Satoshi issued fiat, but people would argue the opposite. Regardless, stablecoins become a thing where like 99.9% of the world's transactional volume does occur in fiat. And stablecoins allow you to do that in a way that's allows you to take advantage of crypto without the disadvantage of like, what's this weird currency all about? So I think stablecoins have proven crypto has a use case. Now,
what are your thoughts on Monero? Sorry to.
No, it's fine. I was just going to finish by saying it's pricing in more than just that use case in some ways. In terms of Monero, like, yeah, it's wonderful. It's kind of like the true original vision of Bitcoin in some ways. But it's one of these things where like, this is more of like a socio-political question of like, what do we really want out of society? Do we want to live in a world where you can have secret money? And
yeah, that's like real cash, like off the books type of.
Yeah, and that's the world that some people want to live in. And there's a world where some people don't. When 9/11 happened,
in terms of an investment, though, Monero's much more risky because already we've seen countries banning privacy coins. So
it's
I
crime
think
coin.
that trend is already established. But sorry, I didn't mean to interrupt.
No, it's okay. It's functionally a crime coin, and I agree with you that it's privacy coin and that people have a right to privacy. It's like a God-given right. But imagine 9/11 happens and you say, we got to find who is responsible for this, who paid for this. And it's like, oh, sorry, it's on Monero. Nobody knows. And you sit there and you curse it. Or God forbid, something even worse happens. And you say, why couldn't we stop it? Well, we could stop it when it was on the Fed wire system. And we could see every dollar from everyone. And that's where trust in government and, can we find a government that's willing to trust us to do whatever we want, but also not snoop on us? And, it's a really tricky position because we obviously see the abuses on one hand, but we also don't know about potentially a ton of horror that could have happened without having that snooping ability. And it only gets worse with quantum or with other tools. Some people believe, I don't believe this, that the NSA already has quantum and that the NSA can read every single thing you have encrypted or not encrypted, whether there's backdoors or quantum or whatever. And again, that's too tinfoil hat for me. But I do think they have a lot of access, and I do think they can read it. But we sort of trust some of these government agencies to have the wisdom of only using these powerful tools for matters of national security, not to spy on ex-girlfriends or see what Elon's doing today. And I'm sure some of that does happen. But at the end of the day, it's a question about society more than it is a question about investing. Investing to me is about comparing the price of something and the value of something. And, in the case of Monero or something like that, to do that, you have to sort of guesstimate where big social trends are going to go. And if you, in 2009, had that same question and you said, based on the current surveillance state and based on the crash, which kind of like seemed like a catalyst for Satoshi, the crash of the global financial crisis, it seems like you should be long things that break you away from the state, things that give you agency, things that give you privacy. And you would have been right. You would have made maybe billions of dollars, as some people had, being long Bitcoin. Some people bought it because it sounded cool. Other people did that analysis and said the value of this is much more than the price. But, some of those analyses, like I'm just a guy that can look at a balance sheet and an income statement and say, this is cheaper than buying an HVAC company. Sometimes it has to be so complicated that you have to look at quantum computing, but it's still ultimately, where's the cash flow going to come from? And then when you talk about things like crypto, you're really like asking more philosophical questions than you are investing questions.
You really are.
Well, this has been fun. Any last people who want to talk? Speak now for holding your
I have a
piece.
question. Since we're off the topic of quantum, I just wanted to ask more about your HIMS position. I was on the wrong side of the HIMS trade. I was short HIMS, and I've since reconsidered my thesis on it. But I just wanted to ask if there are other companies like HIMS, because it seems like there are competitors and even publicly traded competitors.
Oh, there's thousands of. It cost you. One of my friends, who's very well known, she has a company that allows you to make your own hymns. You know, she gives you the API where you can just like spin up your own hymns tomorrow. So there's like thousands of these companies. Hims has executed really, really, really well. I mean, I couldn't believe it at first either, but when I looked through the numbers, I said, it's a fucking amazing company. Like, you got to give the devil its due. I don't love what they're doing to medicine, the practice of medicine, their product. On one hand, I think some of it is good because it's democratizing medicine a little bit more, but arguably it's somewhat illegal. It's sort of sketchy how they sort of spin up a doctor for you to just rubber stamp whatever you want. That's not kind of the way medicine has been provided before. Maybe it should be the way it's provided from now on. Part of me is saying for sure, but Hims is just like uniquely well-oiled machine that executes unbelievably well when everybody else can. I mean, you type in like buy finasteride online, it's a prescription drug, you'll be inundated. There'd be like 10,000 ways you can do that. But most people would say, oh yeah, you need Hims. And that's the power of a brand, right? Like they figured it out. But what do you think about it?
I think they have, just, sort of what you said, there are a lot of competitors. It's, can take less than a day to spin up a competing company, so I don't know. I mean, I guess I understand what you're saying about brand power. But yeah, I just didn't, I was sort of thinking it would sort of wind down because they're spending an immense amount of money on customer acquisition. But I'm now sort of turning and thinking that this trend is going to continue as, insurance becomes more expensive and more people are, just turning to non-insurance methods of accessing healthcare. So I'm looking at other companies that do similar things. So like one that I've looked at is LifeMD. I don't know if you know about it or other companies like Hims, but yeah, I'm on the other side now. I'm with the trend now.
Well, I actually ended up selling. It's hilarious because I ended up selling all my Hims and shorting a small amount. So there you go. People change their minds quickly. Hims was a great investment. It just doubled very fast, and everyone on Wall Street was short it for all the reasons we're talking about. And then now everyone's sort of sitting there, really bulled up on it. All the shorts have covered. This is probably a time to make a small bet against it, but I still like the company. I think that like in the long run, this management team probably will figure out how to make money from whatever. And you saw how opportunistic and crazy they were when they had the GLP opportunity, they went fucking crazy. So, and they dominated it. They're ingenious in a way. And that's kind of what you want out of a management team is they can make lemons into lemonade. But a lot of the companies that do well in the space are like privately held, or I'll look into LifeMD. That seems really interesting. But, even CVS and Walgreens have to figure out how to live in the space. And I don't know. We'll see. But this was a lot of fun. I'll try to do it more often.
I don't know anything about their management team, but yeah, I think just that's a really important factor that you touched on is execution and the management team.
That's everything. At the end of the day, that's all we have, right? When we buy a stock, we're basically saying, I trust this management team to steward my assets that I own a part of. And, Buffett likes to say he likes to buy stocks where even if the management team are stupid, he'll be okay. Like Coca-Cola is one of those where like, what's the worst management can do? But in biotech and tech, like a bad management, it's the end of the story. That's it. It's over. So like, I feel like, you really do have to trust management and get it going. I got to go get some food or something like that. So I'll see you guys later. Thank you everyone for participating. See you.